It's September 27th, 2021. And this is the video like it takes 30,000 to a million. I'm going to do a brief account review. And after I do the review, I want to talk about why you want to buy leap options on Alibaba. So after I review the account, I'm going to blow up the screen like this, where you'll see my face, and I'll talk about it for a little bit. And then we'll go back into the account and we'll see what they're going for. I don't even know. I haven't checked. But first, let's review the account. I'm sitting at 164,708. It's a bit of a beating from my all-time high of 184, so I'm about $20,000 down. This is the 3 month chart that's showing right now. And I might actually zoom in a little bit so you can see that better if you're on the phone, because I know it can be kind of hard to see. All right, I think that's decent already. Maybe a little more. I'll be a bit more generous. Okay, with space. Might make it difficult later on when we're looking at options, but so be it. Okay, so I'm gonna review the account here. You're gonna see all the positions that I have here on the right side. I'm gonna scroll through them slowly. You can pause the video player at any moment to try to figure out my exact positions. I'm gonna start with the options. Over here you can see the symbol. Next is the strike price of the option, whether it's a call or a put, the expiration date of the option, the number of contracts, and whether it's a sell or a buy. Now I have a lot of JD options. I've bought some calls, I've sold some calls, I've sold some puts on VIPS, and you can, if you pause, you'll see the exact positions here. On the right, it says the daily change, and also in percentage terms, as well as the the nominal value of the change in valuation of liability. And these are my equity positions. I think I have only 9 now. Yep, only 9 of them. So Apple, Ebix, Alibaba, JD, Realty Income, Dividend Emerging Market Fund, DEM, Main Street Capital, Visa, and SBRA, which is a healthcare REIT. Now, that's I've been trying to get rid of that, but it's so stable, so I just keep collecting premium on it, and it's not going anywhere. If you were interested in the account tab, well, I guess it's not. It doesn't work as well. There it is, investing. So $225,000 under management here, including the 60 plus $1,000 I have on margin at the moment. So I'm pretty levered up, especially at this point in the market where we're experiencing kind of a high, over, of bought US market. But really, this margin is all taken up to buy the super undervalued, in my opinion, Chinese stocks. So it's, I don't think it's as bad as it seems, but we'll find out if there's a crunch and I lose my account. So, but these are the positions sorted by total return, and these are the positions sorted by equity. Apple is really my biggest gainer here. My number 2 and number 3 position right now are pretty big losers. But at least on Ebix, I've been winning on options quite a bit. I've been collecting tons of premium from that company, and so it's looking all right. I'm surprised that JD.com is actually positive at this point, considering it's the position I entered later, Alibaba, after JD.com is actually down quite a bit. So JD outperforming Alibaba by a wide margin at the moment, just in case you're not in the know when it comes to that. Okay, I think that's it with the account. Now, let's talk about why you want to buy Alibaba Leap options. So, there's a few reasons for that. Okay, number one, I think the company is overvalued. That's a given. Number two is that in 3 years, all of the Chinese companies are going to have to comply with SEC accounting requirements in order to be listed. I think it's SEC. Well, anyway, one of the regulators accounting requirements to be listed in the NYSE and to be traded in America. So who knows whether they'll comply with that. I'm sure they're making plans to comply with that, but their government may not let them. So as we know, the Chinese government just basically does whatever they want, and it's possible that they not let their firms, their corporations disclose sensitive information about numbers to the Western world, which would be a shame, quite frankly. It would be very unfortunate, but it's a possibility. So the leaps, that go out about a couple years from now are pretty safe still. And you can count perhaps on some increase in stock price um, to bounce off of these low levels. There might be some kind of reprieve or relief rally or whatever, and you get to benefit from that. It could be quite high because the company's been beaten down so much lately. The third reason you want to buy leaps instead of perhaps owning the stock like I am, I'm thinking of converting. If it keeps dropping, I'm going to convert my stocks into leaps, basically. Um, the reason why you want the leaps is because the company is not going to start paying dividends anytime soon. One of the major reasons I think is because, well, number one, they're a growth company still at the moment. They're growing, and they would rather use the money for acquisitions and reinvesting in their own businesses. They have a ton of businesses they want to invest in, and I don't see them stopping that attempted growth for many years to come, maybe 4 or 5 years at least. So they're not going to be paying out dividends, and so the leaps would benefit from that, right? Because if they pay out dividends, the stock price might be hurt a little bit by that, and all those shareholders will receive money, whereas while you're holding this contract, you don't receive any of that. In fact, you burn theta, right? You burn premium as you wait for the option for the contract to mature. So you may not want to do that. If you're really worried about the premium burn, which is quite high at the moment, what you could do is you could try to offset it by selling another call that's a little bit higher strike price. You could sell at the money, or you could buy at the money and sell out of the money a little bit um, on the upside there to try to offset some of that. But who knows, because the Alibaba could run quite substantially and you may miss out on that opportunity. So it's up to you. Everybody's got to make their own decision, of course. You could also sell call options short term. So let's say, for example, you buy, a leap 2 years from now, but you could sell monthly call options and try to, you know, recover some of the premium that way. But that requires a lot of micromanaging. Hopefully, they don't hit, right? Because if there's a big spike in Alibaba, which is entirely plausible, and it hits your call option, now you're looking at losing your position there. So that might not be desirable, but you can you can try a variety of these tactics. So let's take a look at some options. I'm gonna go in the browser here and search out, and I'm just gonna click on Alibaba and then trade options. And what a leap is a long-term equity appreciation per something. I don't know. Basically a long-term option, okay? So we're gonna go all the way down to 24. How about January 19, 2024? And let's take a look at the add the money, which, oh, they're expensive. So to buy a call, you need 4 grand. That's rough. Okay, so the bid is 38.80 and the ask is 41.50, making the mark 40.15. Well, it's steep. Okay, well, I'd probably still own it because that's hella years from now. It's 2024. It's quite far away. Well, you can look at this data number. You want this to be fairly high because delta just means how much of this stock price is going to be, how much is this contract going to move relative to the stock price. So this delta tells me that it's about 63% of the movement. So it's going to capture about 63% of the movement of 100 shares, which is actually quite good. So I would be a buyer of this contract. You can see the open interest of this contract is 300. What that means is that's how many bid and ask orders are placed at the moment. That's what that means. Implied volatility 48, okay. So it's quite high, and that's why the price of the option is high. And I like Robinhood here, and I'm sure other, well, of course, other retail brokers do this as well. But it tells you like the break-even price here. You see this? Let me see if you do see it. Okay, yeah, it's 190. If you weren't able to see the Greeks before, you can see them here. The delta is 0.63. But anyways, it tells you the break-even price. So you want to be over 190 and 15 cents by 2024 if you're going to make any money, which the way you get the break-even point is basically you add the strike price of your contract and the premium that you're paying, and that's basically your break-even point. It also tells you how much the stock needs to appreciate by then to break even, which is 30.5%. And this percentage change here means how much the option has changed today. So it's down 7.59%, which is good. So you might be getting it at a discount. And if it goes down tomorrow, you might be getting it at a cheaper price. So I may actually convert some of my shares, sell for a loss, and then flip them over to Leaps in order to gain the most possible appreciation over the next few years if I'm right on the stock. Obviously, if it keeps grinding lower for the next few years, then you and I are screwed if you join me in this party. Let's see, 145 here. You can see the delta on this one is a little bit higher here, 0.65. So maybe that's why it moved quite a bit more than the higher contract. So anyway, you get the point. 4K for this in the money, and if you want, you can actually sell one, let's say at 200, and get some of that money back. But what you're gonna be doing is you're gonna be basically foregoing any profit over that, and it takes 190 to be in the money, but that's gonna offset some of it. So let's see what it says actually. Why did I click myself here? So to break, let's see, sell at 200. Okay, so 2024 to break even. Okay, so it gives me some more leeway there, but that's you're gonna pay premium and get this premium, so it's gonna cost you. Let's do some quick math here. 1,600. It's gonna cost you $1,600 in premium. So that means you're going to benefit from the movement between 166 and 200. Okay, so that would be $34 per share for that time period that you're going to be gaining. Okay, so for every share, you're going to be gaining $34 in 24 in at January 2024. The date right here. So which is a decent return, for that amount of time. Granted, if the stock price goes up over 200 and you have to actually sell them. So you could also sell something further at 250. Okay, you still get almost half of your money back on the premium, so that's a pretty reasonable trade to make as well, and you can make it a call credit spread like that. Or you can just eat the bullet and bite the bullet and not eat it. Don't eat bullets, don't bite bullets either. Like, who does that? And just buy the call and win. You could also just do that. So I'm probably gonna do this if Alibaba keeps dropping. I don't know what you guys are gonna do. Let me know if you plan on buying this company. I know it's super undervalued, and there's been a lot of talk about it lately on the interwebs. So let me know in the comments. All right, peace.